Hi, it's Dave. Welcome to episode 244. So we've got a live stream going on this morning, and I wanted to bring up what I think is a very interesting and kind of monumental shift in the landscape of investing, and how as investors, we can look at it and perhaps take advantage and understand what's going on. If you're on the live stream, go ahead, join in on the chats and give me a thumbs up if you can hear this well. So here's the scenario of what's going on. In the past, let's say 10, 20, 30 years ago, you had investors or traders divided up into three probably main categories. So this is very generally speaking. You had kind of day traders, right, who were just kind of trading just small movements here and there, trying to make, a living day by day. And then you had kind of these long-term investors who are more looking at fundamentals and holding stocks and a portfolio of stocks. And this could also be, people invested in mutual funds and etc. And then lastly, you had this third group of what I call momentum investors. And these momentum investors were people who are trying to ride different trends. And a lot of momentum investing in the past has been more chart driven or event catalyst driven. You see kind of like a shift in the sentiment of a company or stock or earnings. And then you kind of get in at a certain point and you get out at a certain point when it's overextended. Thanks for the thumbs up for those who are joining. Some of the people who are, have been proponents of momentum investing, for example, IBD, they're kind of a big publication that gives these momentum alerts, like when to buy and when to sell. So that's kind of the context. However, something is happening, and I don't know if people are completely thinking about it on a deeper level, because it's happening so fast. And what's happening, in my opinion, is there's a bigger movement that's going on that's shifting what is investing and the whole entire landscape of investing. It's similar in some ways to momentum investing. However, it's actually a completely different take in some ways. And so here's what it is. When you look at stuff like, let's say, GameStop and what happened with Wall Street bets in the past couple of weeks with Robin, etc., when you look at some other kind of stocks or even investment opportunities, let's say like Bitcoin or crypto, in a lot of ways, there's a new form and movement of investing where it has to deal with a movement. And the effort sometimes is coordinated, sometimes it's uncoordinated, but it's joined with social media. It's joined with individuals kind of joining together and believing in something and using the power of the movement, the power of a crowd. And a lot of times these movements might have deep fundamental beliefs, right? Sometimes it could be, and what's interesting with the whole GameStop movement that happened past couple weeks is there seems to be some type of kind of mistrust and distrust of Wall Street, some kind of political bent as well. So these movements can actually be quite complex in nature because they can actually bring in a lot of deep beliefs. The outer expression of these movements can actually be directed toward a certain product, toward a certain company, or toward a certain investment opportunity, etc. And the means could be in many ways. For example, you could have Twitter posts, you can have YouTube videos, you can have social media, you can have articles and posts and just friends talking with friends. And all of this matters and brings together a movement around a company or an investment. And the result of this is it creates more demand for that company and investment. And the result of that is it makes the company or investment to have a better chance to succeed because they have a greater awareness, they have greater ability to raise funds, and it actually can improve the odds of the company or the investment significantly. So let's take an example let's look at some examples of what this movement investing is. And let's first take a look at GameStop. So with GameStop, you have a movement that has created demand for a stock, right? And this is actually quite fascinating because it's not just a simple market manipulation move. Like let's say back in the day, let's say with hedge funds, they would do different things where they still do. They manipulate the media. They have all this onslaught of, let's say, negative articles to drive down, the stock of a company. And then they might flip around and they might give all these positive articles for a company. And we've seen this continuously over the years. I mean, with Tesla, it's a great example of, just shorts and whoever's backing all this stuff, just attacking Tesla, driving, demand or sentiment down for the stock. And Tesla really, and that's one of the reasons why I think Elon Musk is kind of sensitive toward the whole shorts. And what they've done is because they really had a significant impact on making it more difficult for Tesla in the early days to succeed. And it was actually, that's a huge thing if your company has less chance or a harsher environment to succeed. Now, with GameStop, what's happening is it's happening quicker, and it's happening not just with hedge funds using the media, but it's happening with the masses, and it's happening with social media and with individuals. So people are joining together saying, hey, we want to support this company or this stock. It raises demand for this stock and company, and it thus improves the chance of, for example, GameStop to stay alive. Just like the flip side, when the shorts attack a stock like GameStop, it actually increases the possibilities of GameStop to go into bankruptcy. And this is kind of the playbook of some of these well-known shorts, is basically they will short a stock, combine it with negative media coverage, and spook fears amongst all of the banks and the brokers, all this stuff. So they have a hard time accessing capital, and thus the company is just, increasingly doomed to fail. This is a playbook that's actually been written, or people have, uncovered some of this stuff by examining some of the biggest short sellers. And so what you have is with GameStop is you have kind of the reverse of, or not just reverse, but it's a different take on what funds, hedge funds, and Wall Street have been doing, but it's happening on a bigger scale. Let's take an example with crypto. And crypto is a huge field. It's not just Bitcoin. It's not just Ethereum. There's thousands and thousands of different companies and efforts in the crypto space. And I think what's interesting about crypto is it's another movement-based investment approach, meaning a lot of the demand with crypto is being created by the believers, by the fans, by those who really see the future in certain crypto, let's say, movements. And as demand is created, then and the price increases of those investments and of those, let's say, whether it's a coin or a company, et cetera, or service, that improves the chance of that, investment to succeed for a time. So until that demand potentially, let's say, drops. And we've seen that in many different, ways where there can be a coin that jumps up super high, but then just drops after a while, basically almost nothing. But it's not to discount the power of what's going on, which is meaning the masses are coming behind something, massively increasing demand for an investment, giving it immense amount of extra chance to succeed. And this is changing the investment game. Like, I don't know if this has ever happened in this scale in the history of investing. This is a completely, I think, a new phenomenon. So let's take another example with the decentralized finance space. I interviewed Robert Leschner from Compound, and he has an application where they're attracting billions of dollars of money where it's being lent out on their platform, along with other platforms like Aave, et cetera, on Ethereum. But the bigger idea or picture is there's a movement going on where people are putting their money, putting their demand into a product and service, increasing its chances of success. Whereas maybe before it didn't have that great, chances of success, but with more demand, with more movement, right, the crowd believing in it, it improves the chances of success. And it seems to me that this thing called movement investing, right, where we see the masses and joining alongside something and creating a demand for a product or investment, it seems like this is here to stay. It's actually a kind of a complex topic because sometimes it can kind of overlap with manipulation. What if, right, a mob comes and just boosts up demand for a stock? Let's say Dogecoin. You have people pumping this, and even Elon, tweets sometimes. He talks about Dogecoin, and some people are like, "Oh, this is going to the moon," but then they flip and they go, "Oh, it's crashing," and people are trying to get in and out of these so-called investments. And what is going on here? And you can look at it more on a shallow level and say, oh, it's pump and dump. Oh, it's just a shallow thing. People are just trying to, make a quick buck. But if you look at it from a deeper perspective, something else is going on. And it's the power of media, and it's the power of information, it's the power of the masses to create demand and radically impact the rise and the decrease of investment prices. All right, so what is making this movement investing possible? So what's the background? So I think there's several factors here. First, we've got an amazingly quick and speedy flow of information going on with the internet, where information is easier to access and people are following this information like continuously. Like, how many hours a day are people on their phone or on the computer or on YouTube or on Netflix or whatever? They're just constantly accessing information, intaking information. It's almost like we've got this constant, whatever feed it is, Twitter feed, a Facebook feed, whatever social media feed, and it's going into our heads. And that's becoming the new normal. For people who've grown up with this stuff, right? That hasn't been the normal human experience in the past few thousand years, right? This is something very, actually, I think, novel in some ways. Number two factor, we're seeing ideas spreading faster and easier than ever. And it just makes sense with the increased flow of information and people just being glued to fast streams of information. It's easier and easier now to spread ideas. Before, back in the day, let's say a couple thousand years ago, how could you spread an idea? Let's say before books, right? You just have to like talk to people, but that's like really hard to do. And there's a limited number of people who could talk to everyone. And books were just a huge, amazing leap with how ideas can transfer. But think about it, the internet, it just dwarfs the printing press. I mean, we're talking about thousands and thousands of times greater, potential and effectiveness in spreading ideas. And what's happening right now is the power of the internet and the power of this huge information just blast is finally coming to fruition. It's getting realized, and it's shown, the impact is being shown in the investment world, and it's causing waves. In some ways, this kind of new ideas, sometimes they're coordinated, where you have certain leaders who are, spreading these new ideas. And sometimes they're not completely coordinated. They're kind of like organic in some of these. And sometimes they're a combination, right, of some leadership and some organic coordination. It's interesting to think about just what a meme is, right? Elon commented on Clubhouse that a meme was like super powerful, the most powerful thing. He kind of half joked that whoever controls the memes controls the universe. But the concept of a meme is, you've got this idea, right, that's catching on, but because of how our world is wired, and now the infrastructure is being set all around the world where ideas just spread like fire, you've got this interesting kind of world we're living in. The third factor now on how and why movement investing is possible is, I think, investing is now easier than ever before. Before, there was a barrier. You had to sign up for, some brokerage account. It's hard to even make a trade. It was just a huge thing. I mean, this is progressively getting easier and easier over time. Now you've got your phone always on you. You're looking at stock market quotes. People are looking at it all day long. Like, think about it. How many times a day are you looking at the stock quotes? And maybe some people aren't, but a lot of people are looking at the stock quotes of their, portfolio like constantly. And then people are trading. It's so easy to trade. It's not just easy to trade stocks. Now it's easy to trade options. And so the whole barriers to investing is being broken down, and it's a whole new world. And the last factor is, I think people are hearing stories of people making money, like trading and investing. Before, it was kind of this rare thing. Let's say you're in a group of 10 people and it's like, oh yeah, this person made, $1 million on something. That's kind of a rarity. But now it's becoming more frequent, where you can have friends who say, yeah, I know a bunch of people who've made money, right? It's trading on their apps or etc. And now it's becoming something that's more accepted and more common. So when you look at movement investing and you're looking like, oh my God, there's a lot of stuff going on, and this is actually a real thing that's happening. Okay, let's evaluate movement investing a bit. Let's look at the positives and the challenges. On the positive side, I think with movement investing, meaning how movements gather together and get organized and connected, and they start to stir demand for certain products or companies, stocks, or investments. Now, with movement investing, the positives are that more people are getting involved in investing, right? They're getting exposed to what investing is, and hopefully they get educated on investing. I think overall investing is one of those amazingly powerful opportunities, right? Imagine if you just aren't educated at all with investing, you don't think there's any opportunity in investing. In terms of asset or resource creation and resource growth, you're very limited in what you can do. You're probably just stuck with just trying to work and trying to earn, right, some resources or assets for your time rather than exponentially growing, right? Let's say your flock through reproduction or exponential growth. Now, there's some challenges with what I'm calling this movement investing. And part of the challenge is that I think everyone needs to find their edge and they need to find their approach. And I think it's going to be easy for a lot of people who can get burned at times because they're like, hey, I got into this. It was supposed to be a sure bet because everyone else was doing it. And now they drop out because they're like, hey, I lost all my savings in it, right? And that's probably one of the most common mistakes of early investors is to first kind of discount the risks, right? You over exaggerate the risks or the chances that you have to make a lot in an investment. Therefore, the result is you put too much of your portfolio in a bet because you minimize the risk. And that's, some people never recover from that because they get so discouraged and they drop out of investing completely. And so that's one of the challenges is to be able to navigate this and to be able to say, hey, okay, fine, I made some losses, but they were hedge losses. They were minimal losses because I knew to bet just a small portion, right, of my portfolio. I think in some ways you also need to know where you are in that time frame of the movement investing and how long this movement will be for that particular investment. For example, am I early on, let's say with the GameStop play? Am I in the middle or am I a latecomer? Right? And you've got to understand there are different risks at different stages of playing a movement investment play. But sometimes a movement investment play can actually be many, many years. And I think there's also something that's the lines are being blurred where I think there's some type of movement investing effect in actually long-term stocks as well. For example, let's take an example of Tesla. Now, you can also say, hey, why is Tesla valued at almost $1 trillion when it was valued at like $50 billion just a couple years ago? And in some ways, it doesn't make sense. If you just look at fundamentals, like did Tesla really have a 15x, right, or 20x improvement in their fundamentals? No, they didn't. I think another way to look at even a growth story like Tesla is to say, hey, there is some type of movement investment going on here where it's not just about fundamentals per se, but it's about people coming together and actually creating more demand for a company or a stock than the stock has in and of itself. And that actually improves the chances of the company and actually improves and actually boosts the price of the investment too. A lot of this stuff is quite fascinating. I think some of the questions that I have going forward for movement investing is, so what do you do, right? How does this change the game of investing? And I think it has monumental effects and monumental changes. And I think what I'm sharing here in this video is just the beginning, meaning this stuff really needs to be talked about. And how do you take advantage of it, right? I think one is awareness. Okay, this is going on and it's real actually. The movement investing is actually creating true demand, whether it's a super short-term demand for a product or whether it's a multi-year demand for a product, but it's creating true demand that is boosting the prices of the investments, which in turn increases the chance of that investment to work out. Actually, it's actually a whole new world of investing, and how we navigate this is going to be interesting. All right, so I just wanted to share a few ideas with you guys in this video. I'll take a few questions and we'll wrap up this live stream. So let's take Ulysses says, it would be great for you to talk to dumb money guys. We'd love to see the contrast of your perspectives, but adding the logic and deep thinking of the movement, investments, or social arbitrage. Yeah, I would love to talk with actually the dumb money guys. I've seen some of their videos. For those who don't know, they kind of go off a trend. So they're looking at kind of social media trends of what's trending, changes as consumer behavior, and they're trying to get ahead of that and make investments, big investments into areas where the trends are shifting toward before the investment world realizes it, right? So this is another idea, and the concept is front-running demand. So a lot of times, I think this is underestimated in investing, the power of if you can front run demand, if you can go before the masses, before the traditional or the investment world, right, goes into something, then you're ahead, meaning you're first in line, right? So if you're first in line, or even the first 10 people in line, you're just the first kind of, 5% of the line, then you're going to get the best prices on the investments before the 95 other people, right, in line flock to that investment. And so it kind of plays a bit on herd mentality or group mentality where people want to flock to opportunity. It's just that some people are early, some people are late. So the question is, how do you get early? And another question to answer that is, how do you front run demand? How do you get into that place or that product, service, investment before others do? How do you anticipate demand before others do? I mean, these are questions that personally, I think if you stay up late at night and you really dwell upon and get good at, it's actually going to be a huge advantage investing, especially going forward. Zach Taylor. So yeah, what is my thoughts on Bitcoin as an asset versus Ethereum as a platform? How has it changed recently? Yeah, so my thoughts are always evolving. That's why I constantly say my channel is a stream of consciousness. I'm always changing my thoughts with new information. Now that said, I did take a position on Bitcoin over a month ago, kind of as a trade. I've always shared that, I'm not bearish short term on it because I think there's great demand. And it kind of goes with this whole, video where there is demand and growing demand for a product, you just don't bet against that because that affects price, right? If anything, that's short-term bullish in the price. I do have some long-term concerns with Bitcoin. Some of those concerns are actually being addressed somewhat with Ethereum as a platform or decentralized finance, because I'm starting to think, I think I was introduced to Bitcoin, I think in a way where, many people are saying, hey, this has potential to become the reserve currency of the world, right? This is going to prevent, or it's a hedge to inflation. It could play the role of what central banks, et cetera. It's its own monetary policy, all this stuff, which to me on its own, there are some holes with that. However, when I look at what's going on with some of the innovation and the technology that's going on in the crypto space and also the decentralized finance space, which I'm just starting to get into, I'm starting to have a different view on even on Bitcoin, as perhaps Bitcoin, in my view, perhaps shouldn't be thought of as a reserve currency for the traditional finance world. I think that's kind of a stretch. There's so many challenges and hurdles, right, to bridge kind of the crypto and this kind of government's traditional finance world, banks, etc. I think it's much easier to make this jump where you say, hey, Bitcoin is the reserve currency of the crypto world, of the decentralized finance world. It's kind of an on-ramp into the crypto world. It provides kind of a stability role, kind of, one of the stronger kind of roles. And so that makes a lot more sense. And it actually gives, in my kind of current view right now, a lot more value to Bitcoin than trying to make a case that it's, going to be a reserve currency for the traditional world. I think it could be actually a reserve currency for a decentralized finance world. And you can make the argument that a decentralized finance world can actually be bigger than the traditional centralized finance world. Therefore, Bitcoin can become perhaps, the reserve currency, that's even more important than a typical reserve currency. But I kind of see more of a dichotomy of things rather than this, immediate type of joining of things. So those are just some of my recent Bitcoin and Ethereum thoughts. I'm going to have some cool Bitcoin folks on and next week I'm having Robert Breedlove, a Bitcoin proponent. He's going to be on my show. It's going to be a great show, hopefully. And then also I'm trying to get Dan Held. He's offered to come on the show. We're going to be talking about Bitcoin as well. And then I'm also trying to get Charles Hoskinson. He is the founder, CEO of Cardano. And he's offered to come on the show as well. So we've got some great conversations. And I think kind of my value add and my perspective in all of this is I'm not one to decide what people are going to decide. And that's the whole ethos of my channel. Everyone needs to make their own decisions. But I think it's what an awesome opportunity to bring in people who are in the space, who are wrestling with issues. Nothing is guaranteed about the future. That's the thing, right? Everything is in flux. But you're bringing in people that really are pushing the envelope, right? With, let's say, decentralized finance, or whether it's Bitcoin or Ethereum or whatever's out there. And you're giving questions. And here's kind of my angle on why I'm doing what I'm doing here. I just think in a lot of interviews, they just don't go deep enough, right? That's the point of an interview. If you've got someone who is in an innovative space, who has deep thoughts, you've got to kind of get those thoughts out, right? I mean, that's the whole point. And it behooves me to watch interviews where you've got an interesting topic, but you just don't go deep enough with the questions to bring out like all the value. And so anyways, that's kind of my whole angle with these interviews. You might disagree, agree. I'm just learning, right? But I want to bring out value. I want to go a few levels deeper than typical, because I think that's where, the true value is. So Brandon Fogg, what are your thoughts about the comments made by Daniel Schreiber on his recent stock selling? So the story is Lemonade CEO and founder, and also the co-founder Shai. They both have been selling some Lemonade stock. The co-founder Shai less, but Daniel has sold. I'm not sure the exact amount, but roughly 1/3 probably of his holdings in the past 6 months. And so he came on Twitter. I kind of brought this up with an interview I had with Couch Investor. I think that they should explain themselves. And so Daniel Schreiber tweeted, and he said, "Hey, we still have the vast majority of our net worth in Lemonade stock, both him and the co-founder, and they intend for it to stay that way for the foreseeable future." And he also said, their selling was more planned selling, and that was kind of his response. I think a few things. One is, it's great to know that Lemonade's founders are still believing long-term in the vision and plan to hold their stock for a long time. And I think that's great. I reply and say, "Hey, thanks a lot. That's great. You actually addressed the situation. It's better than not addressing the situation, right? Leaving kind of this ambiguous answer where they could sell more and more and more later." The other side, I actually prefer some maybe more specifics. Like, if you're going to sell a good chunk and you're the CEO, and it's more than just $10 or $50 million, because that can be easily explained by getting a house, getting a yacht, or whatever you want to get, a plane, etc. But when it gets much higher than that, I think, it's good to say, "Hey, here's what I'm planning to do with those funds," right? I'm going to start a foundation, or I've got other investments, or I'm starting an investment fund, or just give us some color so it helps us understand where you're coming from. And it kind of, can combat some of the other just natural type of ideas that people might have when a founder or CEO is exiting, let's say, a good portion of their stock. All right, SC, how do you differentiate movement investing from pump and dumps or manipulation? They seem similar. Yes, so SC, you're catching on to what's going on kind of. And this is going to be one of the most fascinating areas and issues with investing, I think, in the next 5 or 10 years. And I'm going to call it out right now because we're super early in this. I haven't heard many people really explain, what's going on here. But what's challenging about movement investing is it really is, in some ways, could be a gray area or it could cross over, depending on the behaviors and practices of the people involved. It could cross over into a gray area of possible, it could look like market manipulation. In some ways, sometimes it could become market manipulation, right? Especially if you have a movement that started, let's say it's a Dogecoin thing, right? And someone's doing some massive media thing, pumping it up, and then right, buying those, selling high, and then using massive media stuff to crash it. And this is the new way, right, of making money. And that sounds a lot like market manipulation, right? You're basically manipulating the market, right, through false information for your personal gain. But we need to discern and go, okay, but how is that different than, let's say, a bunch of people saying, hey, we like this company, we like the stock, we're going to buy it, and raise it up high. Is it only market manipulation if it's false, if they don't really want to, don't really believe in what they're saying? Is it just if they say what's true, then it's not what they think is true, then is it not market manipulation? Or what if it's actually both sides? So they say, hey, let's buy it up. And let's say there's some leaders behind this. And let's say at a certain point, they say, let's all sell, right? Because it's overvalued, and they crash the stock. But let's say they believed both sides. They believed that, it's undervalued. They believed it was overvalued. But let's say people are doing this just on a massive scale. Is this market manipulation? So this is going to be one of the big questions going forward with investing, as the lines get blurred, because information is being just freely accessed. This information is being used to coordinate in some intentionally, unintentionally ways, but it's being used to create demand, which influences prices and investing and returns. So these are the questions. I mean, these are the questions that that people need to think about. And I'm just starting the conversation right here. James Zhu is what percent is in Bitcoin? A tiny percent, much less than 1% actually. It's just very very low. E Magnar says, what percent of your portfolio is in real estate? Before, it was actually a good amount. Let's say when Tesla was just a couple of years ago, we could say, our portfolio is actually a good portion. But now it's like, it's just, down to a very, low percent. I'm even considering exiting some real estate because, one of my challenges is at a certain kind of net asset resource level, it's hard to, I'm trying to fight the temptation to diversify for safety, because this is just my own perspective and I don't want people to misconstrue it. But I think personally, once assets grow to a certain point, and let's use Emmett Peppers as an example, not my case. But let's say you're at 50 million or $100 million, and do you need to diversify so much? I think in some levels, maybe you need to diversify to the extent that you want to keep a certain standard of living, or that you need a certain amount of assets, let's say for retirement or for your family. But in another sense, I think at a certain point, it gives you even more opportunity to actually not diversify and actually to have more motivation to look for the big winners. So anyways, that's kind of one of the questions I'm having in my own investment journey is, how can I kind of hack my holdings in a way where, it encourages me to find big winners, but in a big way. And it's just kind of my own personal kind of take on this. Zach Taylor, what do you think is a process of finding the essence of microcap stocks? Yeah, microcap. I was doing some looking into a microcap stock last week, bought some, but the most difficult part is, because it's microcap, they don't have as stringent regulations. The reports aren't as fleshed out. They're not as kind of looked into. So there's not as much coverage. Also, oftentimes there's not a lot of information about the CEO. And, I'm looking for interviews by the CEO. I only find 2, right? And I'm like, oh man, it's not a lot of information. And I need to verify this company, what they're up to. It's a lot of it is verification. And I think that the challenging part with microcap kind of, stocks, small market cap, is people tend to make up or create their own narratives. Oh my gosh, this company is destined for greatness. When maybe it is, but maybe it's not. I mean, it's just, is it our narrative or is it really the narrative of objective reality, right? That's the challenge, I think, with micro cap stocks. But the more information, the more you have some, I wouldn't say inside knowledge, but let's say industry knowledge. Let's say you know all of the other companies in that industry, right? You know all of the products in that industry. You know how the products work, etc. All of that, I think, helps when you're making investments, especially in more obscure companies. All right. Peter Wang says, movement or global consensus investing. Yeah. Global consensus, I would say it's not really global consensus, because sometimes with a movement, you don't need global consensus. The whole world doesn't have to agree with you. You just need a certain mass to agree with you that can inflict, right, impact or influence on demand on that stock or investment, thus impacts the price. Therefore, you don't need entire consensus, global consensus. You do need, though, a critical mass for movement investing to be taken seriously. All right. Angelo Hunter says, what do you look for the people you hire? Yeah, in my software company that I run, we have several employees, and I've always looked for, you know, a capability for them to be able to work out their own problems. If they have too many excuses, like those people, it doesn't work out because the excuses stop them from solving problems. And especially with software, you need to be able to solve problems. I think the combination of being able to solve problems, say, hey, it's my responsibility to solve this problem. I'm going to stay up late at night, read through thousands of web pages until I fix this, or, you know, or get some help or something. That combined with hard work, where you're saying, hey, you know, I'm going to put in my work and really, you know, get things done. That's a powerful combination. That's kind of typically what I've been looking for over the years in the people that I hire. Yeah, people I hire, they're great. We have great relationships. One thing I want to add, though, going forward, which I'm thinking about and talking about more, is the ability for the person to take risks, and the ability for the person not just to manage and maintain, but to actually create new value, right? To, I guess, in terms of investing, can this person 10x the area that they're involved? Or let's say I want to just hire someone to take over our whole company. Can this person 10x or 100x our company? Do they have that type of mentality, that type of ambition, right, and drive? That's another thing I've been thinking about. And it's something that actually I'm looking for, kind of. I'm actually looking to just hand off our app company to someone who has that 100x ambition. And it's kind of hard to find, like, someone who has not just the 100x ambition, but the work ethic and the problem solving ability, just trying to bring it all together. If you guys know of anyone, or if that's you and you're like, wow, you know, let me know. Maybe I'll interview you. All right, guys, a bunch of comments. I'm stoked that actually we're having this conversation about what's going on in the investment world. And it's not just about a shallow reaction to the news cycle, but we're saying, hey, what does this all mean? Let's carry on the conversation. Let's think about it, move on, and discuss it more. And so I just wanted to bring that up. And yeah, looking forward to, here's what's happening next week is I'm probably going to do another video today about the week in review on Tesla news, EV news. There's a bunch of stuff that I think that people aren't really thinking about, you know, enough on a deeper level. Saturday night, I'll be talking to Emmett Peppers, and he just tweeted this kind of interesting tweet storm about his investing and how he looks at it. I want to go over that and a few other things with him on Saturday night. It'll probably be recorded, but because it's going to be late at night, he's kind of more available then. And we'll probably release it sometime Sunday, and then yeah, next week we've got a bunch of other interviews and things going on. So you got some fun stuff going on here. Just wanted to thank you guys for supporting the channel. All of your guys' support actually helps this channel get actually guests on and give value to you and to others. And so just wanted to say thank you. If you have a chance, if you're on Twitter, I'm at HeyDave7. If you can like any tweets, if I'm like asking someone to come on the show for an interview, if you like the tweet and you actually can tweet the person in the reply saying, hey, yeah, come on Dave's show. I think that's a great help, because a lot of times, let's say a person might not know anything about my channel or who I am, and they're like, who is this guy? And I think to have some extra help from, my viewers who say, hey, Dave, actually, it's a safe place. It's a great place. You'll have a chance to really, explain your thoughts and to share what you're thinking. And it's going to be a great interview. And that's what I truly believe before I do an interview is I actually think the person being interviewed, this might be one of their best interviews, because just because I'm asking a few levels down, right? I'm really sincerely curious about, what they're thinking and what they're doing, but on a really more substantial level than typically what's asked. And so I think that just creates a lot of value. And so, yeah, I just wanted to give you guys a perspective on that. All right. Thanks, guys. And we'll talk to you guys later in my next video. Thanks.